Hello, welcome to Market Avenue. My name is Edward Nyakon. The U.S. Fed increased the interest rate by 0.25 percentage points yesterday. That was on Wednesday. But the question is, what will be the impact on emerging and frontier markets, including ours? So we're going to find out what should be done and what are the ramifications on our economy, especially at a time that we've seen a lot of movement in terms of our investors moving away from our part of the world to the US to invest in government securities over there. So we'll talk to financial analyst Koju Jan and Koju Frimpong, all based in the UK, who are working in the bank sector and financial sector in the UK. But before we continue, let's look at the business language board, what we have for today. Is here to walk us through the performance of the equity market for today. Morris, you're welcome.
Thank you very much, Edward. And I must say that the U.S. Fed has increased their interest rate just around the time the Bank of Ghana will be having a very crucial MPC, meeting, and that should be one of the major indicators. Already, because of inflation, we are expecting that the Bank of Ghana is going to increase the policy rate. But with this coming, then maybe the increase is going to be a little bit higher to accommodate our foreign investors who would like to move, because now the rates are not too exciting for them. So we'll see how that pans out on Monday, when the Bank of Ghana finally delivers the verdict on the economy after their MPC meeting. But when you go to the stock exchange, we see the main composite index going down some 0.25 points. The financial stock index also going down 0.46 points. That's because GCB today lost a peswa, and that affected the market. Even though MTN traded a lot of shares today, that couldn't push the figures into the positives. But Edward, we're seeing the financial stock index now moving into the positive 0.7 percent by way of return on investment when it comes to the financial stock index. And usually we've seen the financial stock index being the main driver of the market, plus MTN. So maybe this should be a sign that in the days ahead we're going to see things change a little bit, and then the main composite index would return into the positive terrain, just as we saw last year. So that's about it for the financial stock index and the main composite index. And so because we saw a drop in the main composite index, we also see just a slight drop in the market capitalization. As of yesterday, we're doing 63.9 billion. I mean, we're still doing 63.9 billion, just some few changes there.
About 3 million, if you look
some
at
3 million change there as of today. So let's look at the results for today. As I said, GCB Bank, as of yesterday, they were doing 5 cedi 19 pesos. Today they did 5 cedis 18 pesos. They lost a peswa there. Then we look for MTN Ghana. MTN Ghana was the day's biggest trader. They accounted for about 98% of all the total shares that exchange hands on the market today. MTN Ghana. So that's what we have. Sure. So that's like 2 million or 2.3 million shares that exchange hands by way of MTN Ghana shares today. Then we see GCB. GCB sold just 1,000 shares, and then EGL sold 35,000 plus shares,
ETI,
and then
2,000.
ETI, and then this
Standard
Chartered Bank, they did 20,000 plus shares. So Edward, that's how the markets is looking like. We are just hoping that, just as we're seeing just some slight recovery in the financial stocks, that is going to affect the markets, and then investors can smile moving forward.
Very grateful, Maurice, for your analysis of the performance of the equities for today. We're going for a short break. When we come back, we'll be hooked via Zoom with Kojo Jan and Kojo Kusi Frimpong to find out more how the Fed hike will affect frontier and emerging markets. Hello, welcome back. We're going to talk to Kojo Jan and Kojo Kusi Frimpong, the Kojos. Great, gentlemen, you're welcome.
Thank you.
Good evening. Thank you for having us.
Great. Now, Kusi, let me start with you. We've seen that the Fed hiked the interest rate by 0.25 percentage points. Now, one will ask, let's look at the global economy before we zero in down to our part of the world. What would be the effects on the global economy at a time that we're seeing oil price, surging beyond the $100 mark?
Okay, typically, central banks across the world would also increase their policy rates. But currently, England, I'll say the Bank of England has done the same thing. So it's now we are looking about 0.75% in terms of interest rates in England currently. And in terms of global economy, we can look at the stock market. I do recall that back in January, China or the Chinese leaders were warning the Fed not to increase their interest rates. But as of today, we have noticed that the stock market is actually quite buoyant in Asia and Australia and New Zealand. And the reason being that the Chinese government has advised that they are going to reinvigorate their economy. So there's going to be some level of stimulus. So tech stocks and then also real estate stocks in China are actually going up. So that has also sort of increased the share prices of the Asian stock. But not just within the international framework only, but now the way things are, the dollar is actually quite expensive. So there's a strong dollar that is ongoing, and in terms of borrowing cost, investors are more flocking towards the treasury bills, the US treasury bills, and that has a wider impact on the way governments across the world will also borrow on the bond market. So that is a snapshot of how things are.
All right, now let me go to Kojo. Kojo, so seeing that investors are rather pushing towards or being driven towards US securities, what would be the effect on, let's say, commodities like even gold, and then even our part of the world, Africa?
Well, first of all, when the dollar, the interest rate goes up, basically, there is likely slow capital flows to emerging markets, weakening, countries, currencies, and economic growth, and so potentially triggering credit risk at highly dollarized banks around the world. So it looks like it's good news for maybe the US, who are trying to use this as a way of more or less stemming, high, food prices and high prices within the country. But then for the major market, this could be, a way of, the dollar, being a bit expensive to get into those countries. And of course, when it comes to, commodity prices as well, they also get affected. As Kojo was saying, when the UK more or less announced that there was going to be an increase in interest rates, just this afternoon I got a message from my bank, telling me that, there's a likelihood that, mortgage, price might go up a little bit. And so this will affect almost all anything or any kind of payments that is in dollars. And so as I indicated earlier on, it will have a knock-on effect on countries who are very, very dependent on the dollar exchange rate. Surprisingly, most of the countries that really rely on the dollars are more of these, North American countries. Africa is very moderate in terms of, the dollar. But as you know, in our country, rely on the dollar for almost every exchange commodity or any exchange product. So I think that then there will be a knock-on effect on that on Ghana as well.
All right. Now, Kojo, Kusi, let's look at Ghana. We do go to the bond market, but at the moment we're having a challenge there. So if the dollar is becoming more expensive, if we want to service our loans as a country, not only Ghana, but even let's look at other African countries, how would that affect our ability, or how would that affect our economy?
So already two things are happening, right? So Ghana, we are an oil producing country. So we also sell our oil in dollars. So there's some sort of windfall. And the same thing happens when the global economy is experiencing such downturn. What happens is that people not just flock to the dollar, but then they flock to gold also. And luckily, Ghana is a gold producing country, so the price of gold also goes up. Perhaps that could be the reason why Chairman Wuntumi wants to buy Chelsea, because he's a gold. So, let's understand these dynamics within that space. But so we will have foreign reserves. But then the question is, are we using those foreign reserves to bolster our local currency? Because what is also happening currently is that we are we are an importing country. So it's more a case of, are we importing everything into Ghana, and are we chasing after dollars? And also, investors that were in Ghana, are they also chasing after dollar-denominated securities? You see, so that is where the issue would be. But in terms of the bond market, it's going to be quite of an issue. So the government must then look at internal market to get a treasury bill rate up. If Ghana is to increase interest rates, then more and more Ghanaians will be purchasing government treasury in cities, and then we might have to then do the onward conversion into dollars. So there's still going to be an issue with our exchange rate. And then because we want to, the time is almost up for us to sort of, pay up the coupon on the dollar debt that we have. So that is where the issue will be. It's more of a balancing act. But I do know that in the past, the government or the Bank of Ghana had tried to get more and more people to use the cedis to purchase gold, for instance. So that is something that they need to really look into to help us to see the way forward.
Now, Kojo Jan, we've seen that, like you said, we import a lot of commodities. Like we've seen, even wheat now is going up, oil prices are going up. With this hike, we already are entertaining fears that, and it's going to be, oil price is likely to go up again. So we're going to take a lot of dollars, a lot of cedis to chase dollars out there. And what will be the effect on the ordinary Ghanaian that is here?
Well, the effect is, I mean, as we're seeing around at the moment in Ghana, the dollar looks to be on the loose at the moment, and so you know, when this situation happens, it becomes very harder for unhinged borrowers to repay currency loans. In terms of the high interest rates, deposits are prone to withdrawal of funds, and so at the end of the day, as you said earlier on, there's going to be a few dollars in the market where everyone will be chasing. So this will also have an effect on the exchange rate within the country. And of course, when the exchange rate goes up, we know that it affects everything within the country. As I said earlier on, the US are basically doing this to be able to stem the local market in terms of price rise in food prices and exchange of goods and services, funds rising as well. So in this instance, in Ghana, we are going to be having that effect of the dollar basically being stronger all the time, and you will need a lot of CDs to get the amount of money you want, in terms of if for instance you are a businessman who wants to get dollars to do your business, then it will affect your business. And so at the end of the day, it also have a knock-on effect on the average Ghanaian who's buying these products.
Now the Bank of Ghana, Kojo Jan again, the Bank of Ghana has started meeting since Tuesday and will end the MPC meeting on Friday, and we'll get to know what they've come out with on Monday. Now, what do you think will be on the table on the Bank of Ghana with regards to this decision by the Fed in the US?
Well, I think that will more or less, make their minds in terms of what has happened in the US, because we know the importance of the dollar within Ghana. So I think that if they are going to be raising interest rate, they're going to be raising the interest rate in Ghana to be able to make the city more favorable for the local market in terms of buying of bonds or investing in Ghana, so that a lot of people don't go after the dollar. So I think at the end of the day, that will be the most important decision they'll make, to make sure that any decision they make is not at a disadvantage at the current interest rates that the dollar has at the moment. So I think that it's more or less fingers crossed. But I think the fact that this decision has come earlier than during their meeting will help them to be able to make the right decision in terms of where to place the interest rates on the city.
Now, Kusi, we know if the policy rate is hiked in Ghana, that means that we're going to crowd out the private sector. Inflation is already surging. It's a very interesting situation and scenario. What do you think should the Bank of Ghana do to get their acts well balanced?
You see, now we are talking only in terms of monetary policy, but we need to go beyond monetary policy and not just Bank of Ghana, but then we need to have a whole discussion about the economy of Ghana. So then we move beyond monetary policy, and now we have to think of fiscal policy. What can a government of Ghana do? What can a Ministry of Finance do? What can the economic management team do? And I already know that there are agitations about, or with trotro drivers, talking about the government doing something about fuel prices. So there are tools that the government can use, like reducing taxes or the component of taxes on fuel, and that in a way can reduce the price of fuel. And then also, because we are an exporting country of oil, there's a windfall, so all of these could be used to cushion the average person.
But remember, we are net import of oil as well, because we consume more oil than what we import is more than what we export.
Okay, so that is also something that the policymakers have to also look at, say, trying to come up with policies. So it's not just to do with the Bank of Ghana, but then it's something that just the government's economic management team have to really sit down and say, hey, this is where monetary policy can take us, and this is where we think fiscal policy can also take us. And then probably, I know there's already been a 20% slash or budget cuts, but can they do more? Can government expenditure be reduced even further? Can we streamline certain government expenditure? So this is the kind of conversation that we should be having.
All right. So let me come back to Kojoja as well. I was looking at the crowding out of the private sector when we hike policy rates. Because he's saying that, look, we should do the balancing act from not only the monetary aspect, but fiscal aspect as well. But in your view, if we increase policy rate with the intent to attract investors, both local and foreign, into our part of the world, what do we do with the Ghanaian businessman that, if we increase treasury bill rate, might crowd him out?
Well, I mean, at the end of the day, you cannot do anything that will disadvantage the local investors, because the local investors will always be there. The foreign investors will come in and then take what they can, and then when things are not working, they'll just walk out. So I think that it is very important that the country or the government create an enabling environment for the local businessmen. I mean, the only if we have stronger local businessmen, then we can actually have foreign businessmen coming to partner them, instead of getting full foreign investments who come in, and we know the kind of deals that we come into with these foreign investors, who more or less come with so much tax breaks, and at the end of the day the country ends up losing a lot. So I think that it's very important that the government have policies in place to be able to create an enabling environment for the local investors, and I think that for this government the onus is on them, because they came with so much promises of creating all these one district, one factory, and all that. These are the kind of businesses that local people can get into to help boost the economy. It's not easy to get a foreign investor coming in to invest. There's so many things that they take into account. But when you have local investors and you create an enabling environment for them, I think that is more easier for them to, because they already know the market. They have nowhere to go if things don't work. So I think that they put more commitment into it. So I think it's very important that we get the government, whatever decision they make, between now and Monday, it is hoped that it will be a decision that will favor, the local investor than, the foreign investor, if I have to say that.
Now, Kuzi, looking at what is happening in the U.S. with this is aimed at, reducing the inflationary pressures. How will this affect the Ghanaian who does remittance in a way to our part of the world?
So
not only Ghana, but even Africa. Let's look at Africa.
The remittance from abroad to Ghana, you mean? Or is it from Ghana?
No, from there. I'm talking about the U.S.
So it is quite interesting, right? If I am to send £100 to Ghana right now, I think whoever is receiving that money would get more money, right?
Fantastic.
But in purchasing power, that would have reduced. So let us understand these things within that context, and understand also that for me, if I'm sending money to Ghana, mostly the sort of remittances we receive from abroad is for consumption, and we need to move away from consumption to more about investment. I believe that a lot, you see, because once we start investing in local things that we eat and things that so I used to read about Ghana exporting, or say producing what we eat and then eating what we produce. So that is something that we need to start inculcating in our thinking. So, for instance, Milo or cocoa is not something that you tend to see Ghanaians use a lot, but we produce cocoa. So, what can we do? What can we change? Do we want to buy what do you call it, polo perfume from abroad, or can we create a local setup where I would invest or I will remit money to Ghana, and our people down in Ghana, or our people in Ghana, I shouldn't say down because I'll be talking down to people, but then can we look at what we can do, where the market is, where we can invest? Because I think that really helps us. Because if I send money and I'm using the money to always pay for fees and for bills, it doesn't really help. We need to put it into something that is more sustainable in terms of investment. So I think that is what Ghanaians should be looking at.
Kojojan, you were talking earlier about your mortgage going to go up. So how will that affect you and other Africans out there?
Well, I mean, it's if the interest rates are going up, and of course you're being told that every month there's going to be maybe an X amount of money, maybe £50 on top of your mortgage, or £25 or £100. That goes into your expenditure, and of course if your mortgage is going up, other things, I mean, in terms of, you could have your council tax, you could have your road tax, everything going up. So it's something that will have an effect on everyone within the country, or within the economy of the UK in one way or the other. Because if your mortgage is going up, I'm sure the businesses will also have whatever renting or whatever mortgage they're paying on their accommodations where they run their business going up. And at the end of the day, that will also have a knock-on effect on the production that comes out. And so it's basically going to increase prices everywhere in terms of this new development that is going on.
Kusi, your thoughts about how we can do what we can do in Africa to this has become like a ritual, a cycle we go through like that. What can be done in Africa to help us withstand these pressures from outside?
So, producing what we eat, eating what we produce is a mantra, but you see, we can go beyond words and put things into action. You see, yeah, because that is very, very important. Can we produce rice in Ghana? Can we produce chicken in Ghana? Okay, is it better for us to eat local or than for us to import? And countries like Nigeria have actually banned certain items. I know going as far back as 2005, there were certain non-essential items that the Nigerian government banned. And just even about the time COVID struck, I believe that the Nigerians were trying as much as possible not to get certain West African nationals to be importing or exporting stuff within there. Correct me if I'm wrong. So we need to really, really have a policy of individualization where we actually have to invest in the things that we enjoy eating.
All right.
And
gentlemen, this is how this time will permit us today. We pause for here, but I think we need to come back, God willing, next week to look at the wheat prices that is surging, and the African Development Bank has hinted it's going to pump $1 billion into that area to help Africa, beef up or ramp up wheat production. We'll have to look at that on the heels of the Russia and Ukraine war. So this is how we wrap up today. The gentlemen were talking to Kojo Jan, a financial analyst based in the UK, and Kojo Kwesi Frimpong. My name is Edward Nyako. God willing, we meet again. Shalom.